All right, so welcome in, everybody. We've got a great. I think you're going to enjoy this as we have our own Rick that will be presenting today. So this should be really cool. So hold on just a second. Let me look at everything here. See what I'm doing. Move to here. Yep. So Melanie said her router is shot due to all the power outages last week. In the meantime, she's hotspotting when she can. Well, Melanie, it's good to have you here today. So, wow, your router had 5 days left on a 2-year warranty. Unbelievable. Now, I never buy warranties. I'm a Clark Howard listener. He's like, never buy the extended warranty, but every now and then it does come in handy, right? Every now and then we need a little insurance. All right. Well, I'm having a sucky day, on the net lick. Look at this, y'all. Down $724. How does Daddy do it? Goldman Sachs continues to kill me, as well as our friend Baba. But I just rolled defensively, and even on my roll, that's down, right? So Goldman Sachs, man, is just on a tear. That's okay, because I analyzed my trade. Let's see, how does Goldman Sachs look? Goldman Sachs still, though, even with all the horrible stuff, if it ends here, is going to be up $1,300. But I got a feeling it's going to end up here somewhere because it keeps on going up. So anyway, well, without further ado, why don't let's turn it over to our friend Rick. Rick, can you share? I'll stop sharing, and we'll let you share your screen and audio.
Sure, be glad to. Bobby, no problem. I mean, this can be short and sweet, so we can get back to what our rabbi has to say.
Well, no, I think what we're going to do, quiz you, Rick, when you start sharing. I think we'll ask you a lot of questions. First of all, Rick, before you get started, can you kind of tell us what your background is as far as trading and kind of where you're at in your life cycle of trading?
Sure. So I started trading about 12, 13 years ago. I got really tired of having the guy that was running my IRA. I got really tired of him going on trips to the Bahamas or Tahiti. And here at my IRA was up like 1.2% for the year. So I thought, I'll bet you $50 I can do better than that. So I was able to start trading on that myself. Of course, I learned rather quickly. The reason he goes to the Bahamas and the reason he goes to Tahiti is he knows a lot more of what he's doing than I did. So I had a lot of ups and downs as far as that's concerned. I started at the beginning trading options, and I started at the beginning doing credit spreads, selling premium primarily on SPX. I didn't really do anything on stocks. I didn't do anything on really all I sold was SPX. So that's where I got started. I had some success, had a couple of down things because I didn't understand about rolling. I didn't understand, because to me it was like, it's a loss, take a loss. And so I learned a lot, and it cost a lot for sure. I learned a lot, and I'm still learning. Well, then I got into Elliott wave for probably about 5 years, and was focusing on trading the Elliott wave style. And although some people, maybe many people can do it, it really wasn't for me. I just couldn't make money that way. So probably about 6 months ago, I got back into selling credit spreads, and that's where I feel comfortable because I understand how it works. And Bobby, the stuff that you have taught us over the past 2 months has helped me and given me a lot of confidence as far as that's concerned. So a couple weeks ago, I met with Bobby. And well, let me back up. So when everybody gets their hey, let me go over the spreadsheet with you session, with Bobby. I told him what I was looking for. I am 66. I'm going to be retiring probably in about 5 months, and I needed to start making some money on a regular income type basis. So I kind of figured out what I need per month in order to retire. And of course, I'm not retiring early. I'm retiring as an old guy. So I told Bobby basically what I want is I want something real easy that I don't want to be in front of the computer. I mean, I tried that zero DTE, and oh my gosh, my blood pressure was so high. I mean, there's a lot of people, or some people that make a lot of money, and that's fine, but it's not me. My emotions can't handle that stress. So anyway, I told Bobby, I don't want to sit in front of the computer all day. I don't want to have to worry all day. I want to do 5, 10, 15, 20 minutes, 30 minutes and be done for the day. So I need some easy things. So I looked at the resources page, and basically there were two things on the resources page. One had to do with Cameron Skinner. And so I started to do what Cameron Skinner did in paper trading, and it seemed to be working. And then I noticed after the election was over, Bobby started doing what I consider, and he may disagree, but what I would consider like the Cameron Skinner way on the micro e-minis. And so that's a good thing for me, because it's something you can do in a few minutes, and you go in and you manage your trades every day, and you take one off and you put one on, and it's great. So that matched my desire. That matched what I wanted to do when I retire. So I started doing that. And then the other link on the resources page was the earlyretirementnow.com, that 3-part thing. So I downloaded all that stuff. I printed it out because since I'm an old guy, I like to have things on a piece of paper that I can hold and handle and draw on and stuff like that. So I read through it, and honestly, those guys are a lot smarter than me. I probably understood 50%, maybe not that much, 50% of what they were saying. But what I did do is I was able to go out and mirror a strategy that they teach on there of growing an income. Primarily through selling credit spreads, and that really resonated with me, because Dean, that's what I'm used to. That's what I feel comfortable with. And they did it on the SPX. Well, they did it on they did several different things, but I zeroed in on the SPX. So I didn't paper trade that because I know how that works, so I started doing that in my live account. Now, on my account, I have basically 1, 2, 3. I have 5 accounts. So all this stuff up here, this represents a combination of 5 accounts. I have 2 accounts that are like over 25,000, and I have 3 small accounts, about $4,000 a piece. Now, I know you're probably not supposed to do it this way, but this is the only way I can do it. And the fact that I manage that as one single account, although it's not, such as I can only sell micros on 2 of those accounts, and not the other 3. So I have to juggle some things in my brain in order to, okay, I do that in this one, do that one. When I retire and I can put everything together, it'll be an awful lot easier for me. So I started doing that. That's why you see all these SPY trades. I've got 5 SPY trades on now. It's almost on 2 of them, it's exactly the same trade, and on 3 of them, it's exactly the same trade, same number of contracts. But it's the same strategy as early retirement suggested. So I started doing that probably back middle part of January. So on my let's see, let me bring this up. So this is my credit spreads. Now, I don't do I don't do equities like Bobby does. I don't feel comfortable with that. And I don't, so anyway, so I don't do equities and I don't do commodities. I do what I feel comfortable doing. So basically I do credit spreads and I do the micros. And I only have one equity thing on here, and that was just a test that I'm trying from something else, but I don't plan on doing that. So anyway, so my credit spreads, now you have to take these first six. I was following another guy named Carl Dom, and his strategy, and it works, but I don't feel that comfortable with it. So I did his a couple times. But basically, since this right here on the 13th, this is when I started doing the early retirement now vertical spreads. And so basically, all these now this one shows red on the 25th. That's the time when the SPX dropped like 90 points in a day. And you know, when it does that, I mean, it's easy to make money on these whenever the market is stagnant, whenever it goes down some, and also always whenever it goes up, you can always make. So this was my first time I was listening to Bobby, and I actually rolled one of these suckers, and I actually profited on it. So this one was down, and the other one was up. So I made my money back. And when I made my money back, I made a profit, a smaller profit, but I made a profit. But basically, all of these that I do, they're all green. And so basically, what the strategy is every Monday, Wednesday, and Friday, you sell a credit spread. So on Monday, you sell a credit spread that expires on Wednesday, and then on Wednesday, you sell a credit spread that expires on Friday. And then on Friday, you sell the credit spread that expires on Monday. Because on SPX, you have Monday, Wednesday, and Friday as far as weeklies, as well as the monthly. So every Monday, at the end of the day, and the way they suggest it on there is you do it like the last 15 minutes of the day, which that does work well. I've done both. I've done it middle of the day, end of the day, but end of the day works well. So for my time, the market closes at 2:00 here on Mountain Time. So on at about 1:45, I will go and I will sell my credit spreads that expire on Wednesday. Wednesday, I'll do the same for the expiration for Friday. Friday for the expiration for Monday. Now, the way they suggest, and I follow this as well, they suggest selling, it depends on the VIX, what the VIX is doing. They suggest selling the 5 delta. And so that's what I started doing. I started with the 5 delta. Sometimes, depending upon what the market's doing, you go down to sell the 2 delta. So you sell the 5 delta. I think Bobby, when he did it, he sold the 7 delta. Which will work. It's not a problem. It just depends on what you're comfortable with and what you believe that the market may be doing. I mean, if you know that, or if you have that feeling, that gut feeling, or some sort of external evidence that the market may be doing an elevator, well, you want to really be careful here with this. So anyway, so I on 3 of my accounts, the $4,000 accounts, I do a 10 wide. So I will sell 5 delta, and then I will move down 10 points, and I'll buy that for the spread. On the 2 larger accounts, I do 4 on each of those accounts. So I will sell the 5 delta. And I usually do it at a different strike than the one. I don't always, but usually a different strike than the ones for the 10 delta. But anyway, so I move out like 20 points for those. So I'm taking in more premium for those. So now I know the tasty treat way, you don't hold anything till expiration. Well, when I first started trading credit spreads 10, 15 years ago, I always held to expiration. I let it expire worthless. Now that normally, probably 90% of the time, 95% of the time, that worked well. but about another 5%, it didn't work well. So I had losses. But on these, I kind of looked to see, and I'll show you my sheet in a second. I kind of look to see where's the market going. If I sell this, like I'll sell some today. I have some expiring today, and then I'll sell some today at a five delta. And so I look to see how it's going. If I'm like 20 points away from my break even, I'm not holding that till expiration. I'm going to roll that out till the next day, or maybe even the next week. It really depends on, but again, what your gut feeling and what the external evidence is telling you that the market may do or will probably do. And all of this is, as you all know, all this is probabilities. The probability of it expiring profitable. So anyway, I blather on, but anyway, so I always allow mine to expire worthless, again, unless the market is doing something odd. So anyway, this is now, I created my own spreadsheet years and years ago, and I've tweaked it all the time. I'm always tweaking the thing. So these are the spreads that I put on Monday that are expiring today. If they expire worthless, this is my projected, this is what that's the profit. And this is where we are. So far today, I've made 90% of the profit. This is where it is, 127. Now here's points to break even. Now this is significant for me. This looks at how many points does the SPX have to go down to my break-even point? Well, I'm at 152 points. Well, now, even if this were Monday and I'm selling for today, hey, 152 points, chances are, probability is it's not going to reach that. And so I feel comfortable with that. I mean, normally when you sell a 5 delta at the end of Monday, Wednesday, or Friday, you're talking maybe 100 points, maybe 90 points, maybe 110 points until you hit break even. So again, so this gives me the confidence. Hey, I've got 150 point. There ain't no way I'm closing this. There's no way, even for a nickel, even for a penny. Forget it. Now, what they could bomb Washington today, and XPX go down 300 points. Well, if they bomb Washington, it's over anyway. So I wouldn't worry that much about it. And then I look here. This is my probability of expiring in the money. And when I sell it, this is normally 5, sometimes 6, but I always watch that. Now, yesterday being a tremendously down day, my 5 deltas that I had sold, at one point, it was this probability of expiring in the money. This was 20. It went up to 20. But when I looked at my points, how many points have to go down to break even, I was still like 70 points away. And I felt pretty confident. I mean, I can always roll. I mean, if I get in trouble, I can always roll. But I felt pretty confident. Yeah, I'm not going to do anything. I mean, I've got, if it's 20% of probability of in the money, that means I've got an 80% chance I'm going to come out great here. So no problem. But again, that's just how I do it. Everybody has to do it their own way. Everybody has to do it the way it makes sense to them. And really for me, it's the way I feel comfortable. Do I feel comfortable with this? Because I'm tired of sweating and having my blood pressure go up and say, oh man, I don't know if this is going to work or not. I don't know. So I don't like that. So anyway, so I look at these two things. I look at these two things as well to let me know, is that what I'm going to do? Am I going to hold till expiration, or am I going to roll? Again, I only had to roll one time, and that was the time of the day the market went down 90. Now at the end of the day, I rolled probably about an hour and a half before the market was closing. I went ahead and rolled. Now, if I had held, it went back above my break-even point, so I would have been okay. But I would have been okay by like 3 points. I don't do that very well, not me. So anyway, I rolled out, So for me, this trade has worked out very, very well. I have no problems with it whatsoever. Uh, Based on my account and what I feel comfortable trading, uh, I mean, and again, I on the 10 wide, I trade 6 contracts over 3 accounts, and on the 20 wide, I trade 8 contracts with 20 wide. And so this would be the profit. So in order for me to supplement my income at Social Security when I retire, I mean, I only have to make like $1,000 a month. Well, I mean, even doing Bobby's micro, well, you can do that. I mean, that's not a problem. And that's what I was looking for. I was looking for a way to make a certain amount of money every month so that I would feel confident and I could retire knowing, hey, all right, I'm not, when I retire, I'm not going to Tahiti. I'm not doing a world cruise. I'm going to stay in my sweet town of Colorado Springs and enjoy life with my wife and my grandchildren. And that's my plan. I don't want to buy a speedboat. I just want to enjoy life. And this allows me to do that. So anyway, so that's what I do. Now, one of the reasons that I have, let me back up. I try to use the spreadsheet, Bobby's spreadsheet, to manage the forest. Now, what I find though, now if I go to my Greeks and ratios, so you're going to notice my Greeks here are almost always positive. And then you got some days, I mean, they're like over 100. Well, those days, whenever you take these trades, like on Monday, when you take the spread, it really zips your positive delta up. I mean, that's why the delta is so large. And then if you notice, my theta seems to, you got 20 here, you got 0.5, today you got 0.10. That's because on those days, it's almost sucked all the premium out. And so you don't have a lot of theta on those days. So I was having problems with, all right, so I want to manage to be delta neutral. I mean, I want to be a little delta negative, but as you can tell, I haven't really succeeded there. But I talked to Bobby about this. And so basically what I do starting this day, I really didn't add those SPX credit spreads in my delta. I just did everything else. And so that made me a little more comfortable. I'm still positive, as you can tell. So anyway, so that's when I talked to Bobby last week and said, hey, can you give me a hand here? Can you give me some ideas here? So anyway, so that's what I do. That's how I do it, and it works well for me. I don't have any problems so far, so good. And if I do have a problem, I'm going to whine to Bobby. Say, Bobby, please help me here. And if I still get in trouble, I'm just going to blame it on Matt.
Right, we all blame it on Matt.
Yeah, absolutely. So anyway, so I'm going to stop here to see if Bobby wants to do something else, or you have any questions, or whatever you want.
So, Rick, this is what's so beautiful about this is that, I often go back to what Karen said. Y'all know I love the Karen videos and watching what Karen did. She says, the simpler I made it, the more successful that I was. So she started paring down. She'd trade 30 stocks, then she'd trade 10 stocks, then she tossed out stocks altogether. And so what Rick is doing now, he's just trading a couple of underlyings, primarily SPX, which gives him the 1256 contract, wonderful tax advantages, right, that we still have with trading SPX. He's trading defined risk because he's in a spread. He's doing a trade that has at opening a 95% probability of success because of how far out he is. And he's got a plan in place if the trade goes against him, which is very, very strong. Rick, I think what we would like to know more of is what is that pain point? Because go back to how your trades are doing today, your credit spreads trades. I mean, you see that both of his trades now are in the green, right? So they're positive on the day. There are days where Rick, he's opening this and those are
Oh,
red, right?
absolutely.
And yeah, for example, the one that I was in earlier this week, you open it up and you go, it was down. I think mine was down at some point, maybe $250. What is that pain point? What do you wait for price to touch your strike, your short strike before you roll? What is that? What is the adjustment that you make?
So normally, uh, what I've always done in the past is I always look at it. This is how it's doing right now. Okay, so and this is the total of well, this would be the total of what it's well. Forget Amazon. I'm testing that out. That's it's a sucky thing. But anyway, so yesterday, if you added these two together, I was down. I was down like $2,000. Now, I don't know about you, but it was like, oh my gosh, this. I've had to train myself that I don't look at this. I look at this, and I look at this. So I may be down a lot of money. So I was down at like 8 o'clock. Well, it would be 9 o'clock, 10 o'clock Eastern time. I was down like $2,000. 30 minutes later, I was back into positive because the way they price options, I don't know what IGMO came up with the idea of how they price options, but I mean, uh, the SPX can actually stay the same and the price stay the same and not move. And between 5 and 10 minutes, you're a couple $100 difference. And the SPX hasn't moved at all. Now it's probably the volatility that is priced in there. But for me, basically, and again, this is for me, this is a work in progress. I look at my probability of expiring in the money, and basically, if this gets to 40, I honestly, seriously consider rolling it. But even at 40, you have a 60% chance of it expiring. And then I also look at, well, now how many points to break even? If this gets down to, I think when I rolled the last time, it got down to like 25 points, and the SPX can move rather quickly. It can go down or up 25 points in a heartbeat. It really doesn't. So again, for me, I look at this is my red flag here. If I get up to 20, I get a little nervous. If I get up to 30, I get more nervous. I get up to 40, I'm going to roll it and go for there.
Rick, do you remember how much that particular position was down when you rolled that one the other day, the one that's in red?
Sure, I was down like $3,000 or $4,000 on that one. Now that's before. Now here, I used to always look at the delta, but Bobby always looks at the probability of expiring in the money. So I changed that to probably expiring in the money. So at that time, I was looking at the delta, and what I was doing, I was like 20, 30 points from break even. That's when I rolled it. But I was down $3,000 or $4,000. And yeah, hey, that's a lot of money for me. That's a lot of money for anybody for the most part. But and this is just me. I can't trade based upon how red it is. I trade right now. I trade as far as points to break even and probability. If I rolled every time this went red, I'd be rolling every single day, almost every day. Because yesterday was, as you know, yesterday was a very down day. But I looked at my probability and I thought, hey, this is $2,000. That's a killer as far as I'm concerned. But look at my probability. And so I traded based on I traded based on that. So again, I was down like $4,000 on that trade before I rolled.
And I think that's what we've been talking about is that remember I said yesterday I was getting messages from people that's were panicking. I saw on the Tasty Trade discussion, a lot of people were panicking on their wheel trades, when the market was down yesterday. And the thing that you can't do is panic, because what the uh, inexperienced trader will do is close that for a loss and accept the loss. When Rick had no reason to, he's sitting there going, wait, I'm trading the 500 largest companies in the United States. Can they continue to go down for several days, week? Yeah. But what he was able to do is say, okay, look, we'll close and we'll roll into a new position. Now, Rick, when you rolled in the new position, it looked like, if I was looking at the one that was right after the red, you rolled to different strikes, but you were still able to take in a credit.
I did. I did. I rolled down 20, 30 points, and one more expiration out, and I still took in a credit. So yeah, that was a positive thing. I mean, uh, I look at even this style. So I measure everything by the amount of stress it causes me. All right. If stress was on a scale of 1 to 10, and 10 meaning I'm ready to kill somebody. So trading zero DTE was a 10 for me. I mean, I just couldn't do it. Now trading these credit spreads, for me, the stress level, it's probably about a 3 or a 4. But if I only did what Bobby was doing in his micros, I mean, to me, that's like a 1. You don't really have to worry about anything. So this credit spread, it's a little more stressful. Again, it's not a 10, it's not a 5, it's maybe a 3 or a 4, because you do have to. At least I do. I have to watch it. I'm sure you can set on your phone for it to give an alert when it does that. I'm not there yet. Maybe one of these days I will. I know Bobby does that. But anyway, to me, it's the ability to make profit stress free, or as close to stress free as possible.
Rick, will you go to Thinkorswim, and will you just walk us through the trade? I mean, putting on a new, like, let's say it's 3:45 at the end of the day, and you're going to put on this trade. Just kind of walk us through it,
Sure.
so everybody's really familiar with how you're doing it.
Absolutely. So this is today. Those are my positions. So basically, I go out to the next one, which is going to be the 26th, which is Friday. And I open that. I go down to, and Bobby's spreadsheet, it's a great spreadsheet, but it's a killer as far as computer resources are concerned. So it makes things slow-ish. Sorry, Bobby, but that's the way it does.
Absolutely.
So I go to, I look at my probability of expiring. I don't really pay much attention to the delta for the most part for these types of trades. I look at my probability of expiring, and it happens to be 5. So if I'm doing the 10 wide, I sell the 85, and I'm going to buy the 75, and that's about 25% profit. Now I will say this, for me, on a 10 wide, if I get 25 to 30 cents per contract, sometimes I get 35, but that's rare. That's about what I get on a 10 wide. Now, if you look at the percentage that you make based upon, it's not very large, and you have to be comfortable with this. So, such as for this one, I got this one I'm in now, I got 25 cents. And so this is my max profit on those 6 is $150, but it uses $5,800 in margin, which basically, if this expires worthless, basically my profit is 2.6% of what my margin is used. Now, there are some people that are not comfortable with that at all. You say you're getting too little for the amount of money you're using. And I would agree. I wish it were higher, but to me, I weigh the highness. I mean, I could always go in and sell a 10 delta. I could sell a 15 delta, and this number may go up to 7, 8, 9, 10%, and you're making 10%. But I'm trying to make it where the high probability is for less stress for me. So I have learned to be comfortable anywhere between 2 and 4% of what of the margin I use. But anyway, so then I do my I've got oops, too high. Then for me, since I don't do a single account, I have multiple accounts. So here's the 5 accounts. So I'll do 2 on my margin, and I'll do 2 on my margin, and 2 on my IRA, and 2 on my Roth. And then if I'm doing the 20 wide, I'll do the same thing. I'll go to 5, and I'll just move out 20 points. And normally for 20 points, I get anywhere between 40 and 60 cents per contract, which is fine. But of course, you're using more margin being 20 wide.
Yeah, and you're taking more risk, but you are
absolutely.
You know what the risk is. It's defined.
Absolutely, it is defined risk, and my probability of profit is just, as Bobby said, I've got a 95% probability that this is going to expire with profit, and that's what I'm looking for. Now again, you can go out and you can do a 15, you can do a whatever you feel comfortable with, but that's not me. If you're trading, if you're Rick, you're trading with a 5%. Now, one of these days, I may get to feeling my oats, and oh yeah, I think I'll always do an 8, or I'll always do a 10, and then I'll manage it more. But right now, again, the whole goal is, number 1, to keep my stress level down, and number 2, not to have to sit in front of my computer and worry about things. Trading Bobby's way, especially in the micros, I mean, you're able to sleep at night. I honestly, I used to wake up thinking, I used to have dreams that the market tanked. Oh my gosh, you just lost money. You've got to check it. And I would wake up 2, 3 in the morning just because of the dream, get my phone and see where the futures are. Oh, that was just a dream. I think I'm okay. I don't want to live that way at all. So that's why I'm settling for a 5% probability with a 2 to 4% profit on the margin that's used, and it's enough for me. Based upon the amount that I'm trading, it's enough for me, and so that's what I want. I don't want to be a rich guy, and I don't want to live in poverty. I want just enough. Now, that's not everybody, but that's just me. I don't anyway.
Well, Rick, you were talking about the zero DTE, and a lot of people like the zero DTE because they get instant results in a day, and
Right.
they don't have the overnight risk. But as Rick said, and when I was trading zero DTE, and not to say that I'll never do it again, it's part of my plan, but man, I had to watch that market like a hawk. I think I did 1 or 2 sessions with you guys where I had them on, and I couldn't even focus on what you and I were doing because I was looking off to the screen to make sure that those things weren't, in trouble. So you got to weigh it, right? So Rick is almost getting instant results. I mean, his longest trade is going to be a 3-day trade when he puts it on Friday, expiring on Monday. But over the weekend, he really has nothing at all to worry about. I mean, he can watch the futures, but SPX is not traded. So, he's getting immediate benefit. What, 3 times a day? You've got 3 expirations a week. Before long, we're going to have 5 expirations a week, I believe, and you'll be able to do this every day. So he has another good thing about this. So he does have some overnight risk, but he's assuming that risk. It's defined, and he's got a plan that if the trade goes against him, he's just going to roll out and he's going to roll down, and he's still going to be able to collect a credit. It's a beautiful, beautiful plan. he doesn't have to worry about dividend risk, because he's not doing calls and there's no dividends on SPX. He doesn't have to worry about earnings. There's no earnings on SPX. In and of itself, he's getting some diversification because it's 500 companies, right? So it's really just a beautiful, beautiful strategy. Rick, before we open it up to questions for everyone, can you go through what else that you're doing with the micros? Let's just see what you're doing with the micros, and it looked like you may still be doing the VIX hedge as well.
Oh yeah, I'm for sure doing the VIX hedge. There's no
So
doubt
just
about that.
kind of go through those things with the micros and what you're doing with the VIX hedge.
Okay, well, for the micros, not equities, for the micros, basically on Monday, Wednesday, and Friday. Let me back up. So what I'm trying to build this up to where I have such as 20 on at a time.
Yeah.
Like with Cameron Skinner, he would again buy one and sell one. He would buy the 60-day out, and then he would sell. He would open the trade 60 days out, and he would close it 30 days out. So I'm slowly but surely trying to build this up to about 20. I haven't done that yet because I only do these based upon my account size and my comfort level. Again, I can't express enough. I'm kind of like if Bobby's the worst trader in the world, I'm the second worst trader in the world. Or just to be honest with you, I'm the first and he's the second. But to me, I have to trade based upon what causes me stress, and I don't want to do that. I don't want to have stress. I've had too much stress in my life. So anyway, make a long story short. So I have almost all puts except for one. So for one call. And now what I would normally do if it wasn't for Bobby's influence, I would normally go on Beth's page, and I call this Beth's page, it's the action page. And if it tells me, I'm a rule follower when it comes to this stuff. I follow the rules. And so if it tells me sell a call, sell a put at 15 delta, that's exactly what I would do. But Bobby hates calls. He hates them with a passion, selling calls. So that's why I'm hedged on the side of puts. And just to be honest with you, it's not a bad thing because, as you know, the market generally goes up more than it goes down. It's either sideways or up much more than it goes down. So being long on puts, hey, I can understand that's not a problem. But I follow what the rules say, follow what Bobby says, and I do the 15 delta or probability because I've got the probability here. I know you got the actual delta, but I've programmed in to do the probability of expiring here. So I'm trying to learn that. So anyway, so that's what I do. And just like Bobby does, I go and I look at whatever my current profit is for the day. When I manage, I don't necessarily look at the profit. It's always good to know what the profit is, but I look at the percentage and I look at the close, what it says to close. So I don't, just because it says tasty trade optimum, I don't always do that. I do try to hold it at least to 30%, sometimes 40, 50. I mean, today I haven't done one because I did one yesterday when the market was down so much. This is the one I did yesterday. It's up like 25% because of the market anyway rebounding back. But as far as the micros, that's what I do with the micros. Again, I don't do. I know Bobby's equity sheet is so filled. I don't do equities. I don't like equities. That's just me.
I don't like them either, Rick. To be honest with you, I don't.
Okay. And then on my VIX hedge, I do exactly what this thing says. I've never hedged before. This is my first time, and it reduces, believe it or not, it reduces my stress level, so that if we do have a March of 2020, or we do have a, God forbid, a spring of 2009, I'm covered. I mean, this brings me great stressless relief. I like that. Now, Bobby was talking about the hedge yesterday with the IWMs, and I don't blindly do what Bobby does, but I tell you what, Bobby's like my rabbi. If he says so, I'm going to take his word for it, and I'm gonna look at it. I'm gonna read it. So I went back anyway. So I'm looking at that, because what that would do is that would certainly help with my deltas, because I've always been delta positive. So that would help. So anyway, so I'm looking at that as well. On my, I do pay attention to this, because I want to sell what it says. Now my yearly desired return, I'm at like 21%, because I'm thinking, if I just make 12 grand a year, I'll be fine. So this is the stress-free I'll be fine page. I can zip that up to 50 to 70, but this is just me. I'm not trading for anybody else. I'm trading for me. So I do pay attention to the day complete, and I do pay attention to how much I have to sell before the week is over. But I tell you what, trading the credit spreads like I do, I never have a problem. I mean, as you can tell, since I started trading those on the 13th, I have been over 100. I mean, here at 300%. So I don't. I'm all, and this is even taking into account the micro trade, and I don't do that all the time like Bobby does. But I'll tell you what, when I simply sell premium on those credit spreads, this gives me all I need. I don't need anything else necessarily on that. So.
And look, guys, this is the amazing thing. So look at his premium capture on closed trades, that 39.61%. Rick, I want you to scroll down just a little bit so we can see the little dream, my little dream sequence there. Look at this. The man is getting 39.61%. So we expect to get 25%. He is letting those things close at most of them at 100%, which is really, Rick, helping you on your premium capture on closed trades at 39%. Look at he's going for, what was it, Rick, a $15,000 profit on the year?
Yeah, 12
or 13. Look, he is on a projection using a very simple techniques, keeping it as simple as possible. He is on track for $21,000 in profit. Now, keep in mind that little box on the right, that's what I call my dream. I mean, it's kind of lofty to look at and to project what you're doing, but it kind of, gives you I think you'll find that's more, the more you get into the year, right, the more that's going to be on track, and it may change a little bit. But look, his projected yearly return at his current capture rate is 33.27%. He is projected to have weekly profits at $412. He sold not nearly as much premium as I have sold this year. And his profits, total premium selling profits this year, are $6,098. And even this week, he's above his projected weekly profit of $498. And just take a look, Rick. I mean, I commend you on this. Look at your last 3 weeks, 1,100, 1,200, 1,244. Very, very good numbers. And all Rick is doing is using the resources that we shared, things that he's already doing, and he's made it his own. And he's got a very, very nice plan. So he's selling premium. He's got risk. He's got hedges to manage that risk. He's putting the probabilities in his favor. And number 4, Rick, you are rinsing and repeating.
Yep. So every week.
Every week. I mean, he's like a robot, y'all. And Rick, this is amazing. I mean, just can you show maybe the realized returns chart and your profit chart and all that, kind of see how things are looking?
So this is the realized profit. This is what I've made on micros so far this year, which it's small. And basically, I want the micros to be bigger than the credit spreads. If I get the micros to where I want it to be, that's what I want. Other trades, those are the ones that, well, forget that. I lost. So anyway, so this is the credit spread, which is the largest as far as the profit chart. So anyway, so this is my profit chart. This is I'm not complaining at all, for sure. No complaints.
Rick, I'm getting teary-eyed looking at this. I'm about to squall. This is so pretty. I mean, this is so beautiful.
Well, I'll tell you, Bobby. I mean, the resources that you pointed me to, as well as it helps me so much to come in day by day, and yeah, you rinse and repeat. You go through. You manage the forest, then you manage the trees. That has given me a confidence that here's a plan. Here's a great plan that will work for me. And I mean, being here with everybody in the group, I mean, it's been a blessing. It's almost like another family. It's almost like a team, like we have teams at work, and we think about each other. We pray for each other. We care about each other, and I mean, this is a great environment for me as far as trading is concerned. But listen, this net lick value, it would not have occurred had you not pointed me and given me guidance to do something that is what I want to do and the way I want to do it. So it's like I just went to the cafeteria and you served me up my plate and it has everything on there that I wanted. And go through the checkout line, and instead of paying for it, you give me money. So hey, no complaints here.
Rick, that's kind of you say, but listen, what you've done is you've taken, the resource, you've made it your own. So I mean, it's the kudos are to you. I take nothing to do with it. I mean, this is really fabulous, and it's just wonderful. And I will say this, guys, that what I put in the resources tab, there are very few things that I put there in our Discord. Like I saw some good market measures from Tasty Trade this week, right? But I didn't put them in our resources, not because they're not good, because they're not the best of the best. If something is super, super good, I put it there. And the Cameron Skinner, putting the trade on at 60, closing at 30, man, I thought that was fabulous. The early retirement now, where they back tested the exact strategy that Rick is doing now, had great back tests. I said, man, that is really, really something. Rick, I'm also going to get you guys to look at something else as well that I'm thinking about placing there as well. And it's let's just call it milking the cow. And some of you guys may have heard of that as well. But it's something that we'll play with. And the IWM hedge that we put on the other day, just being able to adjust our Greeks when needed it's just so empowering. You go, wait a minute, my Vega's out of control. I need positive Vega, but I still don't want negative theta. Well, you can do a diagonal or a poor man's covered put or a poor man's covered call to do something that will get you in line. So there's all different strategies to do this. But what Rick has done is he's just said, you know what? Keep it simple, stupid. Right? We've heard that, the KISS, and he has kept it simple, and he's just doing fabulous. So I like what Ken said, Rick. I don't know if you read this or not. Let's see if I can find it. Did my mouse go dead again? It did. All right, let's see. Ken said, why is it not rolling up? Hold on one second. He said it was when he elected to stay in front of his computer instead of going over to the grandkids that he changed his ways like this, so he doesn't have to look at it. Isn't that great? Yeah. Instead of being, just tied to it all the time. So, guys, this is great. Melanie says, love having the VIX hedge on. Yes, I mean, the VIX hedge is awesome. So, any questions for Rick at all? I mean, this has just been fabulous. I could sit here all day.
I don't have any questions, but I just really appreciate you sharing your how you're handling it and doing it. And yeah, just really appreciate you sharing. So thank you.
Well, I appreciate the opportunity, and I'm glad you have power back.
Hallelujah. Now we just have to get a new router.
Yeah, there you go.
Anyone else got any questions or comments for Rick at all? Matt, you're not going to say anything? Matt's just, it depends if his boss is in the room, right? Y'all remember Matt? He's the one that got me to sell a call in Goldman Sachs that's going against me so bad. Y'all remember that? He was like, Bobby, you cannot lose on selling a Goldman Sachs call. So anyway, well, Rick, listen, kudos to you, my man. This is really awesome. And thank you so much for sharing. It's just a wonderful presentation and very inspiring, very inspiring.